Hey everybody, welcome back to the Optometry Money Podcast, where we're helping ODs all over the country make better and better decisions around their money, their careers, and their practices. I am your host, Evon Mendrin, certified financial planner and owner of Optometry Wealth Advisors, an independent financial planning firm just for optometrists nationwide. And thank you so much for listening. Really appreciate your time and attention. And on today's episode, I am joined once again by Ali Oromchian, attorney with Dental Medical Counsel, to dive into a brand new federal business entity reporting requirement under the Corporate Transparency Act. And this is a brand new set of reporting requirements starting this year, 2024, and it's going to impact you whether you own a private practice, whether you own rental real estate under an LLC, or simply an independent contractor or a side business and you've formed a legal entity for that. If you fit into any of those categories, you need to be thinking about how and when to file this new reporting. So hopefully this helps you know what it's about and what needs to be done. I've added all of Ali's contact information, as well as the main webpage and resources for this reporting into the show notes, which you can find at the Education Hub on my website, www.optometrywealth.com. And while you're there, feel free to schedule a no-commitment introductory call. We can talk about whatever's on your mind financially and share how we help optometrists all over the country make better decisions with their cash flow, invest wisely, proactively plan around taxes, and so much more. And without further ado, here is my conversation with Ali Oromchian. And welcome back to the Optometry Money Podcast. I am excited on today's episode. Well, maybe excited is too strong a word, but I'm ready to go into a really important new topic for optometrists, especially practice owners, but even more than practice owners, and that's new reporting requirements under the Corporate Transparency Act. And to guide us through that conversation, I'm excited to have back on the podcast Ali Oromchian, attorney at Dental and Medical Counsel. Ali, thank you so much for coming back on.
Yeah, thanks for having me. Yeah, I always want to come back on because I always enjoy our conversations, but it seems like, this time it's about a topic that very few of us expected to have to deal with, but it's become such a hot topic this year. But it's always fun to be here.
So let's dive in, because I've just in the conversations I've been seeing and hearing and having, it just doesn't seem like a lot of optometrists are aware of much about this new reporting requirement. Many have never heard of it before the last week or so. It's something that seems to have come out of nowhere. What is the background to this? Where did this new reporting requirement, where did the Corporate Transparency Act come from? What's the background here?
Yeah. It's sort of it's something that's been in play for a while, actually. We knew about it, about a middle to last half of last year. Wasn't really on our radar to really kind of come out and talk about it because there's so many other things happening. But there's this entire movement that's occurring to protect against shell companies being created by illicit actors. We're not talking about, optometrists in the United States, right? We're talking about optometrists in China. No, I'm just kidding. They're not optometrists, but they're just people around the world who may be creating shell companies to buy real estate, to buy stock, to buy interest in private and public companies, and doing various other things that the government wants to protect against. And so they've been kind of moving down this road for a while. As many of you probably know, if you go open up a bank account, they make you sign all this documentation that says, you're a U.S. resident and you're not a terrorist and, all of this other kind of stuff. And so this is just going down that same road. And the purpose is very simple. They want to know, the federal government, not the states per se, but the federal government wants to know who owns the various corporate entities that exist across the country, right? And they want to know not only who owns them, but also who's setting them up, right? And so that's the purpose of the rule. And it went into effect on January 1, 2024. So now, anyone who is a corporation, LLC, and then some partnerships will have to make this reporting.
Got it. So the stated goal, at least, is to sort of open transparency on who owns all of these different entities, and to fight, criminal activity, basically money laundering, any type of illegal activity happening with shell companies where no one really knows who owns different layered entities or whatever it may be.
Exactly.
I'm sure everyone will come to their own conclusions about new federal reporting requirements, but that's the stated objective, at least. And so as you mentioned there, who needs to, or what type of entities need to do this reporting?
Yeah, so basically it's any entity that must register with their state has to report, make this report and file it. And so that includes all corporations, doesn't matter if it's an S or C, all LLCs. Some partnerships will have to do it too. And, typically the partnerships that do are partnerships of individuals as opposed to partnerships of corporations, because those are joint ventures, and most states don't require joint ventures to be filed with them. Of course, if you're a partnership of corporations, which is sort of the model that we recommend, the corporations have to file, but not the partnership. And and the way the rule is broken down is that if you have an existing entity that was filed before January 1, 2024, then you have the entire year of 2024 to make this filing. Now, most of our clients are asking us to do it right now for them because they don't want to forget about it, when the end of the year comes, or, systems go down, things change. And so we're filing a lot of these now just to kind of be done with it. If you are setting up a new entity in 2024, then for this calendar year, you have 90 days to file it. And then starting next year, you'll only have 30 days to file it. But most people that we incorporate this year, and we've already done, I don't even know how many, probably 50 of them, we will be doing the filing for you, because it requires a lot of information about me as well as your filer. So there's just a lot that goes into it.
Got it. Okay. So the entities required to file don't include sole proprietors. So self-employed, self-employment where there's no entity at all. So sole proprietors without an entity don't need to do this, but basically any other entity that requires to file something with your state is going to need to do this. And this includes not only practice owners, but if you own real estate under an entity like an LLC. So it would include those as well, right? So you might have one individual with several entities that need to do this. And
100%. Yeah, 100%.
For an entity like a practice where there are multiple owners, is it just one set of reporting per business or per entity? And then that one set of reporting will include all the information for all the owners? Like, how does that work?
Exactly. Yeah, it's one filing, but you need to basically list all the beneficial owners and things of that nature. So it's one filing, but all this information about who owns the entity or whatnot needs to be included in it.
Got it.
Exactly.
Yeah. And then say again, like where there's a situation where there's layers of entity, where you mentioned where you might have an S corporation that owns interest in a partnership, for potentially for an optometry practice, something like that, where there's layered entities, where there's one entity like an S corporation that owns interest in another entity like a partnership. Which entity again is the one that's filing this reporting?
Yeah. So the rule is that a reporting company is any corporation, LLC, or other entity that is formed by filing a document with a state. Okay. So if you have, let's say, filed a partnership with the state and you've paid those fees and all that, then you should be reporting that. Now, what I was saying earlier is that typically what happens is that a partnership will typically only file with the state if it's a partnership of individuals versus a partnership of corporations.
Got it.
right? And because a partnership of individuals files with the state because they got to know that there's a partnership. A partnership of corporations is technically called a joint venture, and that typically is not filed with the state. But those corporations that are the partners end up filing, of course.
Got it. Okay. That makes perfect sense. And what type of information is needing to be disclosed on these filings in terms of who owns it? Like what are they wanting you to put onto the filing?
Yeah. So they, like I mentioned, like we were talking about, they want to know, who the beneficial owners are, and they want to, if it's a new entity, they want to know who's forming it as well. Whether it's me or a lawyer or some other, paralegal, whatnot. They want to know all of that information. But basically, what they want is information about a beneficial owner, and a beneficial owner is defined in essence as either someone who exercises substantial control over the company. Okay. And so substantial, right? I mean, what does that mean?
Yeah.
but substantial, or they own or control at least 25% of that company. So if there's someone that owns 24% or less, let's say, or, then they don't have to be sort of listed. But if they own more than 25%, they do. Or if they are some sort of, manager that has substantial control. Now, we are not necessarily, putting office managers and those kind of folks on there, even though they sometimes have substantial control. I think, right now it's just focusing on the ownership, right? Whoever owns it, if they have 25% or more, then they should be listed.
Got it. So it's there, including I'm assuming their name, address, some sort of form of identification, pretty detailed there, right?
Yeah, exactly. Yeah, it's just exactly. It's like their, just basic information, driver's license information and whatnot, just to be identified.
Got it. So you mentioned some deadlines there, right? So if your business existed before the start of this year, you have until the end of the year. If you're starting a new entity this year, then it's 90 days. Eventually, after the new year of 2024, it'll be 30 days. What are I'm assuming there are some penalties or some sort of consequences for not filing or choosing not to file correctly or accidentally not filing correctly? Like what do those look like?
Yeah, the penalties are actually like really harsh, which is kind of surprising for something like this, but I mean, the government is definitely not joking around. So they have civil penalties and criminal penalties, if you can believe it, right? So it's either $500 a day up to $10,000 as the civil penalties or whatnot, if you don't do it correctly, or 2 years of imprisonment.
Wow.
Right. And I shouldn't say or. Did I say or? I meant and. Sorry, and 2 years of imprisonment. So not only could you be fined up to $10,000, $500 a day, but you could also go to jail for 2 years with this. And here's the crazy thing: it's not just this initial filing. You also have a requirement to file within 30 days any change in the ownership. And I think that's what's going to get people, because, practices change hands, partnerships come and go. This isn't necessarily something that's on the top of people's minds, but, if they get audited and this and that, it's going to become a problem. But it's a pretty serious thing. And that's one of the reasons why so many people are doing it now. So
yeah, substantial penalties. I would hope the criminal penalties are reserved for those who truly are committing fraud or willfully doing it incorrectly. It does seem like there's a safe harbor for correcting accidental, inaccurate reporting if you do it within 90 days. So it does seem like there's some leeway, but hopefully those criminal penalties are reserved for those truly committing fraud here. But so there is a requirement. I want to talk about the requirement to update because you mentioned there's a requirement to update with any changes. What change does that require? Is it a requirement in the residential address of one of the beneficial owners? Is it require a new beneficial owner altogether? Like what actually needs to be required to be updated within 30 days of that happening?
Yeah, the way they've described it is incorrect information needs to be updated, right?
Okay.
So any incorrect information, the obvious one is if there's new ownership, right? That's easy. But yeah, if you move, in theory, you're providing incorrect information, and so you gotta update it.
This is like when someone moves, they forget to update like credit card, with the new address and bank accounts
Right.
and things like that. Like there's a whole list of stuff that needs to be updated. I mean, it needs to be moved to the top of the list for sure. If there's some penalties that come along with it, and I
100%.
interrupt.
Yeah, 100%.
Yeah,
No, I do think there's going to be some leeway there given, right, to some folks, but I do think it's one of those things where you just, as an advisor that you are, that I am, the CPAs are, it's just something that we have to keep in mind
yeah,
and have it be done, as just part of kind of what we do, right? And I think if you do that, you're going to be okay. I think the folks who just totally ignore it, I think that's the people that, if it becomes an issue, they're gonna make it an issue.
yeah. It's certainly going to make its way to my review checklist throughout the years. But so
Oh,
we
100%.
we talked about some changes then. So that's an important note. 30-day window to make updates to changes in beneficial ownership. If you're going through a transition, make sure you're leaning on your professionals, your attorneys that you're working with through that transition to update the reporting there. Who are the people? Because I've just been listening to on the tax professional side, sort of uncertainty of whether CPAs can legally help with these reporting or not. Who are the professionals that can and should help practice owners and other entity owners with this filing if they need the help?
Yeah, yeah. You know what's funny about that? We've seen a lot of CPAs come and say that they don't want to do it, and I think they're being advised by their malpractice carriers and others that that's not the place for them. So, obviously, we as lawyers can file it, and we have been. People who incorporate can file it. I would be a little bit concerned about going to some of these online agencies that file corporations to do it, because there's a lot of personal information that you kind of have to provide and give them access to. So I think I would be a little bit wary of that. But and then of course you can try to do it yourself as well. Although a lot of people have said, look, it's kind of confusing. I'm not sure exactly what they're asking, and so on and so forth. So they just are kind of avoiding that. So
Yeah, that makes sense. Yeah, certainly for the listener, just talk with your professionals and see what needs to be done there. If you're having issues with that, I'll throw a link to the show notes to the FinCEN, which is the part of the Treasury that's running this, all to their portal in terms of how to do that and how to get in there, and lean on your professionals. I mean, this is just another thing, unfortunately, that we have to do as business owners, but lean on your professionals to give you the guidance that you need and to make sure it's done accurately and appropriately, and avoiding all of these unnecessary, unfortunate penalties that can come along with you. And anything else optometrists need to know about this reporting requirement?
So just a couple of things. One is I'll also give you a link for anybody that wants us to just kind of file it for them this year. I'll send you a link to just kind of put on the show notes if you want.
Cool.
And then if anybody has any questions, they don't want to do it, just go ahead and click on that. There are 23 exemptions though, where if you fit into any of these 23 exemptions, you don't actually have to report. We've gone through all 23 of those, and what we have gathered is that for optometrists around the country, there's only really one that would most likely apply, right? And because most of them are like, if you're an exchange, like a securities exchange, if you're a bank, if you're a CPA firm, which how funny that they put them in there, right? So, if unless you're one of those, a venture capital firm, you don't have to report. But the only exemption that some optometrists might fall into is what's called the large operating company. Okay, the large operating company, and so there's a 3-factor test for the large operating company, and so the first factor is that you've got to have 20 or more employees, full-time employees. Okay. And so that's very important. The second is that you have to be operating or have a physical location in the United States. That's an easy one for everyone who's listening. The third one is that you've got to have $5 million or more of gross sales. Okay. So 20 or more full-time employees and be physically located in the United States and 5 million or more of gross receipts. Okay. Now, there's a little nuance here that I want you guys to know, because some of you have multiple offices. The 20 employee criteria has to be 20 employees per location. Okay. So if you have, let's say, 3 offices, you need to have 20 in each. So if you have not the average, but 20 or more in each. So if you have 5 in one and 40 in another and 20 in another, only 2 of them would qualify, right? So you just have to keep that in mind. The revenue, though, the $5 million, can be aggregated amongst the businesses if there's a shell company or a kind of an umbrella company that is kind of where all the revenue is going to. And those are called sort of tax exempt companies where, the lower entities are disregarded tax entities. Everything kind of flows up to one. So in that situation, it can be aggregated. So not a lot of OD practices will fall under, a lot of you have 20 employees, but you may not fall under the $5 million, revenue. So it's just something to keep in mind.
Okay, that's interesting. And it seems like a lot of the exemptions are because these type of entities already report to the federal government in some way. There's an exemption for certain investment advisory firms. So it seems like that's the case. Is that the case with these large operating companies? What's sort of the reasoning behind that?
Yeah. No, I think you hit it on the head. I think that's exactly right. I think it's because there's other mechanisms whereby they are reporting, right? And so or maybe there's large enough where the government's not worried about somebody doing some illicit work in those kinds of larger entities. I don't know, but the one that's excluded specifically that might apply to OD is the only one really is this large operating company.
Got it. It's interesting. All of these entities report to states, right? So you are already reporting information to your state government, your state regulator, whatever it may be. Unfortunately, it might be different reporting in all these different states. Maybe the federal government doesn't get the information equally from all different states. So they're just adding another layer so they're getting it directly. But I really appreciate that. If you can send me the link you mentioned, Ali, we'll throw that in the show notes. And I'll put all of your contact information so anyone who is feeling overwhelmed with this can reach out to you. And I'll also throw in as many links as I can about this topic in the show notes. But appreciate your time. This is an important topic coming up for this year's special deadlines for this year. So this, I think, will be helpful. And anyone that has questions can reach out.
Sounds great. Yeah. Thank you.
All right. And for everyone else, appreciate you listening. We will catch you on the next episode, and take care.
Want more resources to help master your money? Check out the Education Hub on Evon's website at optometrywealth.com. Evon Mendrin is a certified financial planner and owner of Optometry Wealth Advisors, a California registered investment advisor. All opinions of Evon and his guests are their own. This show is for informational purposes only and should not be relied on for specific investment, legal, tax, or other decisions. Clients of OWA may own securities mentioned on this show.